Greetings traders. In today's video, let's discuss one, I would say, rather niche or specific trading approach, which is yet quite effective if you want to use it and apply it correctly. And this is order flow trading. Well, in its essence and its simplest form, order flow trading is something which you could relate physically, because order flow trading is sort of direct descendant to floor trading and all those hand-to-hand tradings. When someone gives you buy or sell orders, you could simply deduct and see how physical traders react, what's their information of order flows and what trades are going to be and what are for these trades. And if you know this flow, you could anticipate the moves. Like the best example, of course, is physical trading exchanges before era of internet. There you simply saw that there were floor traders which knew what are going to be their customers' trades or what could be trades of other brokers, so they had slight information and analytical edge, and they could use it either via better price execution times or better price execution prices. This effectively is order flow trading, and now order flow trading obviously has gone up to online trading community. There are some ways how you could actually apply it in real life. These three approaches are: first is market depth, second is so-called time and sales approach, and third is order footprint analysis. So let's roll and explore these three order flow trading types. Market depth is simple description of analysis of market where you see depth of market orders. That's called market depth because you could see depth and deepness of how much orders certain market has. The deeper the market, the better way how you could execute those prices. I would say here it works well if you have small cap stocks or small cap altcoins, because on these exchanges, especially with altcoins, you could see what are actual order book and you could deduct there what is the market depth in these transactions, and then you could see how you could actually trade to that. Because there might be illiquid markets which you couldn't trade because there is no order depth, or if you have large chunks of capital that you want to sell, well, you simply need to wait and see what are the prices where you could execute them. So yes, and I would say that it's not really practically useful if you trade something like euro against dollar, because firstly, there is need for objective information how you could actually get that market depth. And with retail brokers, you simply cannot have valuable information for largest currencies. And even if you have, there is nothing much you could actually do or impact. But as I told you, if you have large chunks of small stock or small altcoin, everything changes completely differently, because there you absolutely need to know what are the orders, what are the market depths, and how you could actually buy or sell your orders for prices that you like. This is pure theoretical, so you could just get an idea. This could be actual price and there could be bid and ask levels. So simply you could see more people are willing to buy for lower prices and selling for higher prices, and middle ground evens out. That's as simple as that. And about order books, simply also here are here are buyers, here are sellers, and each one best price, and they go to middle for that common ground. So extremely important if you trade something like altcoins, as I told you before. Where this strategy comes in hand: firstly, you have certain amounts of stocks or shares or altcoins, as I told you like 5 times before, where you need to buy them and sell them. You actually have to use this trading approach, because with these markets, with illiquid and small markets, you wouldn't do much with common known fundamental or technical analysis tools, because markets are way too illiquid. Here the trick is to see what are markets orders and how you could actually pull your prices for conditions that's possible. That's their market depth approach works. That's the only way how to work it. And so I suggest you to actually read some good historical books of old school trading, and then you will see how this approach has been stapled for physical trading for decades. So it's worthwhile to see it as well. But now let's move on. Next is time and sales, or so-called tape reading approach. Here also this is more or less old school approach which has simply evolved into electronic trading, and here the trick is to see complete analysis of financial market. Well, that's why it calls time and sales, because this is an analytical tool that simply shows you how markets have traded and what are the trading statistics for certain time and certain market. Like for instance, we have XYZ stock which is listed on over the counter or on, I don't know, on Nasdaq, and you could see that on specific day or specific hour it traded with certain price, certain volume, certain bid-ask orders, and it's for you to decide whether you could buy it or sell it or what are the patterns here. In practice, it's better for you to think in also terms of physical trading here because, well, if you have seen those old school videos where traders had ticket tapes and they read what's happening, this is kind of similar with that, where you simply look at the price chart and the tape and see what are the data behind it. And then you could derive certain patterns. For instance, is trading activity increasing? For instance, if you see like hourly charts of certain instrument, you could see what are the interests from buyers or sellers. Is the volume increasing? Is buy orders increasing? Is sell orders increasing? And if there is some sort of pattern here, if that is, if you could clearly see that people are trying to buy more than sell, well, it's good indication that prices might go up and vice versa. And this is the approach how you could actually use them, I would say, more as an analytical tool. Okay, and the third one is footprint chart. This is more like a chart analysis tool, but it works in the similar fashion as previous two approaches. Because here, as opposed to regular candlestick charts, you could see trading activity across the certain time. For instance, you have daily chart in certain stock. In a Japanese candlestick chart, you could see opening price, closing price, maximum price of the day, lowest price of the day, and it will be either green or red if the prices have been risen or declined. But with footprint charts, you could see bid-ask information and trading volumes as well. So you could see what are the trends of trading activity and how they reflect to prices is. For maybe, for instance, in the morning, stock has been killing it and it has huge activity with high orders from buy side, where it has been risen, and then later that day, it went to complete opposite direction where prices actually started to fall because there were huge amounts of sell orders. So footprint chart gives you that information and it could be seen more visible. But here also, it's important to understand that you have to work with some real practical use with that information, because if you look at the most liquid currencies or something like that, their information changes so rapidly and markets are so big that with our capital as a retail traders, we couldn't do much there. So I would say here, this is more as an analytical tool for understanding market information and how you could actually use it for certain evaluation of trends. For instance, you could see longer term footprint charts and to see then shorter term footprint charts and to see whether they are aligned with each other or goes to opposite direction. Because if footprint charts and long-term charts clearly says there is bullish pattern, but then at the last couple of days or hours, it changes and you see in shorter term footprint charts that there are way more sell orders and consequently prices are falling, that might be indicative then trade is ending, and similar approaches. So this, I would say, works in this approach. So here we have, I would say, theoretical chart of how these footprint charts look like. So you can see it's pretty boring if you don't know where to look, but here is sellers, here are buyers, here are volumes, and you could see what are the, for instance, buying volumes here, buying volumes there, selling volumes here, selling volumes there, and how actually they move. You could see that you have to see the patterns between buyers and sellers and how do they reflect to prices. Well, if you're a complete beginner, this might seem a little bit dry. So as I told you previously, start to use it more as an analytical tool rather than a clear trading instrument. But it gives you additional depth for that. What I could say also is that if you want to see more of this type of trading analysis and how actually professionals use these sort of more advanced indicators and trading approaches, I suggest you to join my Telegram channel, because here you will see how I operate with real market conditions, how I actually trade and analyze my trades, and you could get free trading signals with these approaches. So you have to do practically nothing. You simply join my link, which is below the video, follow my Telegram channel, and we could make good money together. So join me there. Let's move on. Now I have to conclude this video and I have to absolutely emphasize rule of risk management in order for trading, because as it is with every trading approach and every trading strategy, if you don't have risk management, you don't have trading. Because even if you have best analysis and best order flows and you understand how markets move, it takes one wrong move, one wrong trend, and you are out of the business. So always test these strategies, test these approaches, have tight stop loss levels, have clear risk rewards per each trade, and risk less than 1% of your capital, regardless of how professional you are, because that's simply basics of trading. So that's about risk management, but overall, this is slightly more advanced approach, and it's not that applicable for complete beginners. And it works better if you are trading altcoins or small cap stocks, because their fundamental and technical analysis doesn't work that well, because markets are illiquid, and the name of the game is ability to execute processes with your conditions. And for that, order flows and understanding of market depth and footprint charts are absolute must. There you have to simply look at the liquidity and available information for buy and sell orders. This is how it works in smaller markets. But for larger markets, I suggest you to see whether you have good trading analytics and reliable data, and then you could use them as more of analytical tools that confirms your idea whether trend will be upwards or downwards. So for small illiquid markets, this is basics of trading, because nothing else works, especially if you have large chunks of sweating capital. But if you are trading larger markets, view this as more of an analytical tool, because it works really well if you know how to correctly apply it. So this is my viewpoint and my perspective of order flow trading. Check it, it's interesting, it's slightly complicated, but if you know how to apply it correctly, it could do wonders to your trading. So thanks for this video, and let's meet later.